Evening all. For those of you joining us from overseas, welcome. Tomorrow is a big day here in New Zealand. We do have a general election, and for the last two months we've been forecasting various outcomes for what's going to be happening tomorrow with iPredict. iPredict is a prediction market. It's market-based prediction, and what you do when you go to iPredict is you buy and sell stock that relates to what's going to happen in various future events, in this case mostly the election. Now, what we're looking for today is a little bit of investment, and we'd love introductions to decision makers in corporates and in government departments. So if you're in either of those spaces, do please come and have a chat to me. So this is the front page of iPredict. Now, before I walk through what it is you do when you're on iPredict, I will just mention, if I can, we have had a little bit of buzz over the last couple of months since our launch, a couple of appearances on TV1, TV3, about a month ago, and then on Monday we were fortunate enough to be involved in the leaders debate, just doing a few numbers with John Campbell there. We've had one or two mentions in the popular press as well, in the mainstream media. There you go. I have no idea how long it took me to put this slide together. So we have been very fortunate. Now let's just do a quick walkthrough of what you do when you are on iPredict. You are buying and selling stock. So let's take a look at a stock that predicts whether Dunedin Stadium's going to get Dunedin's going to get its stadium built started by the end of next year. So this stock pays $1 if and only if that stadium construction commences by the end of next year, and right now it's trading for 55 cents, and the interpretation of that price is a 55% chance that that stadium will begin construction by the end of next year. So let's say I want to take a trade or take a position on this stock. I'll click trade, I'll go to the trading interface here. These are the lists of orders to buy and sell. I'll be accepting one of those offers to trade. I'll put in a price that I'm willing to pay. I want to buy 5 shares, so I'll be accepting an offer to sell. I'll confirm the trade is completed, and the stocks go into my portfolio. So it's very much like a share market. You get stocks and you can sell them any time you want, or you can hold them and wait for them to pay the $1 or not, depending if you predicted correctly or not. Now, I will come back to this again. I'm sure this is all very confusing if you're seeing it for the first time, but here's the upshot of this is what we want from a prediction market. When you're trading on a prediction market, you're buying and selling, you're trying to make money, but what we're interested in as the owner of the market is what it's predicting, and this is what these numbers are showing us. Now, this is real data taken from about 2 p.m. today, and it's our two marquee stocks that are looking at the election tomorrow. Who's going to win? The blue line, of course, is National. You can see they're trading at around 88 cents. The red line is Labour. That's trading at around, I guess it would have been 12 or 13 cents. Now let me take a minute to explain what a stock is. A stock is an agreement between iPredict and whoever holds the stock to be paid $1 by iPredict if and only if the event that you're predicting comes true, and nothing if it doesn't. So a stock that pays out if National wins the election tomorrow will pay holders of that share $1 for each share that they hold, if and only if National leads, and nothing if they don't. And under those conditions, the price that the stock trades for is the prediction. A stock trading for 88 cents in this circumstance, National, 88% chance that National is going to win the election. Stock that pays out if Labour wins the election, trading for 12 cents, 12% chance that Labour is going to win the election. So if you're batting for the blue team, it's looking pretty good for tomorrow. So let's talk about the commercial opportunity that goes with prediction markets. Now, the problem is that, as we all know, all organisations of any size, but in particular large organisations, face uncertainty. They have to deal with imprecise forecasts, they have to pay a fortune to get them, hire teams of analysts and so on. Information inside the organisation doesn't necessarily flow cleanly through it or quickly, and any organisation has in the heads of its employees a huge body of latent information and knowledge that is possibly largely untapped, and a prediction market is a way to get at that. And another thing is that employees don't necessarily feel like they have a stake in the direction that the organisation they're working for is going. Well, a prediction market can help with those things. Firstly, what we're talking about here is giving organisations their own market to run the stocks, asking questions that they care about, and have their employees who have all the information in their head trading on those stocks. Now, the reason for this is quite simply it's a way to get at the information that's in their head. By trading and buying and selling, a market price emerges that reflects the combined wisdom of crowds, and that's the point for getting a prediction market in the first place. Of course, for employees, all they're trying to do is buy low and sell high and make a few dollars, or win the prize, or get kudos at the water cooler. But the upshot is a market price that tells senior management what they want to know about the questions they're asking. So let's take a real-world example of what we're talking about. I want to make this really practical. What would you be doing with the prediction market if it was in your organization? So let's say you're in a company with a major project that's going on, and you've heard rumors from the top that maybe it's not going so well. So let's run a prediction market on it. You'd set up a stock that closes on the day that the project needs to be launched by, let's say 1st of March 2009. And you would define that stock to pay $1 if and only if the project launched on time and nothing otherwise. And then you go and ask your employees to trade on that stock on your own prediction market. Now, it's just your prediction market. Nobody in the outside world can see it. Only your employees can get access to it. So let's see what happens. Let's say we launch the stock today, the 7th of November. And remember, the question is, will this project launch on time? Stock opens and it does that. What's the answer? Well, this project's in trouble. And we know that because the people who are best placed to tell you are the ones trading on the stock all the way down to zero. So this project's in trouble. And let's say it goes along for the next week, bouncing around at about zero. So management in this time has seen this. They've seen a very clear signal the project's in trouble, and they're formulating a response. And on the 14th of November, next Friday, they announce a response. And they say, right, we're going to add 5 employees. And we're going to increase the budget by $1 million. Let's see what happens. Well, price goes up, traders respond, they've seen what management's doing, and they're, again, in a very good position to understand what effect it's going to have. And the price goes up to 60%, but it doesn't go any higher. So 60% chance literally means a 6 chances out of 10 that the project will launch on time, 4 chances out of 10 that it won't. Now, let's say management looks at that and thinks, well, it's an important project, we need 100%. Let's give it another FTE, let's give it another $100,000. Again, they announce that. Employees respond, again, by buying and selling the stock, and there's your answer. So there's 2 things going on here. First, management got a very clear signal the project was in trouble, and they got it straight away, on the very day that they launched the stock. The second thing is that they got to measure the value of their response to that problem in real time. And they got to measure it in a way that matters. Is the project going to launch or not? Yes or no? And they got a number to go with that from the very people who know best what the answer is. Now, you can ask anything with a prediction market. It doesn't have to be around project management. You can forecast sales, revenues. You can ask what your competitors are going to be doing. You can ask what's the outcome of a case against us going to be. Will we get that resource consent, and if so, when? What effect will our new policy have on our share price? What effect will a change of government have on our share price, and so on? Now, I want to make one thing very clear. One of the bits of feedback I've had is it's confusing what's the difference between traders and market owners and so on. A trader is a company employee that goes to a website and buys and sells stock, and they're simply there to try and buy low and sell high and make money. It's just like trading on a share market. They're not actually there to share what they know. They want to make money or win the prize or get bragging rights. Senior management wants to know what's in their heads, and a byproduct of that buying and selling is a market price that reflects what's in their heads. So it's kind of a symbiotic relationship, even if it's almost goes unspoken.